SlateStone Wealth Chief Market Strategist Kenny Polcari. And Kenny, hello to you. You know, the quote Santa Claus rally, right? It began December 24th, right. Officially goes to January 3rd. We're wondering, is Santa going to drive this market higher into the next year? Because 2024 has been a great year.
And so I think Santa's already come, right? Because it's been, to your point, it's been a very good year. And look, we're kissing the highs of the year right here. I think we're going to end up here. Do I think it gets any better from here? Not really. I think it continues to churn over the next 4 days, right? We got today and then Friday and Monday and Tuesday, and then it's over, right, for this year. So I'm thinking that he's already come and that this is it. And then investors need to start to focus on really what's important next year. And that's going to be the new administration, new policy, deregulation, what the Fed's going to do. So I think there's a lot to happen, but I think Santa's already come.
Well, I mean, looking at the year-to-date performance of the NASDAQ, we're up 33.3% so far. I mean, it's been phenomenal for tech. So you're right. Santa Claus is probably on, it's Boxing Day. He's on vacation today. But Apple, but Apple is on the verge of becoming the first $4 trillion company. Wedbush raised the price target to $325. They say it's a golden age of growth on the horizon into next year. Are you still a buyer and holder of Apple because you've been very bullish on it this year?
Yes, so we own it at the firm. I own it personally. Apple's going to be one of those names that I die with, right? I'm just no reason to sell my Apple. It does nothing but continue to outperform, right? So every time there's weakness at the end of the quarter, when the trader types all stamp their feet because they missed by $1 billion. Meanwhile, they make $100 billion a quarter, but they get mad when they miss by $1 billion. I go and they sell the stock off. I think it's ridiculous. So on weakness, I continue to buy Apple, and we as a firm will continue to buy it on weakness. I'm not chasing it at the top. It's great. It's going to be a $4 trillion company, but I'm not chasing it up here. But that doesn't mean I won't buy it if it starts to go, if it goes on sale.
Okay, if it goes on sale, because I was going to say, you were on the show 12/19, December 19th, and it was at $249.79, and now it's at $258. So even in that short amount of time, the stock has gained. Kudos to you on that call. All right, let's talk long term.
No, look what it's done. Look what it's done this year, right?
Yeah. Long-term plays. Let's look forward. Opportunities. Where are you looking for them? What do you want to invest in now?
So listen, the three names you see on the screen there, right? They're all on sale. Caterpillar, I think, is down about 16%. Verizon's off 10%. And Novo Nordisk, they just killed that one. It's down about 43%. The latest stretch down coming last week after that new weight loss drug that they're talking about missed, the trial results. People only lost 22.7% of their weight versus 25%. And on that headline, they took $20 out of the stock, which I think is absolutely ridiculous. Novo Nordisk is one of the biggest European farmers, right? It's not going out of business. I think this is just a gimme, the Novo Nordisk. But the other two, look, they're a little bit more, they're American. Cat, is a big industrial name, but it is on sale. And considering this new economy going in with new president, new administration, hopefully a new economy, global economy, Cat should benefit. And Verizon's a very boring name. Nothing sexy about Verizon at all, but it's a great dividend payer, pays you about 7% for owning it, and it really trades in this $38, $45 trading range. And now it's kissing at $39 at the moment, and it's finding plenty of support there. But I think, on weakness, Verizon's another name that I own, and we own it. But on weakness, I'd be adding to my Verizon just because that name offers ballast to your portfolio and stability.
Let's look at the macro story on the S&P 500, because right now the most bullish call that we've seen is above 7,000, 7,100. Do you think that we've got enough momentum in 2025? I know we've got a new administration. There's a lot of excitement, but you've also got the question mark on tariffs. You've also got the question on Congress and reining in spending. All of that kind of goes into the soup of whether or not we're going to have a strong year for the S&P. What do you say?
100%. But I think the thing that most concerns me is what's happening with the Fed, right? I think that's going to be very, very important, especially in the first part of the year. Look, rates have done nothing but go up ever since Jay Powell started cutting them, right? The 10-year treasuries are 3.6% when he cut by 50 basis points. I think today they're kissing 4.62% at the moment, aren't they? Or actually 4.57 now, but they were at 4.62 this morning. And I think you have to be cautious just about what the bond market is telling us and where rates are going to go and what that may mean for stocks. And so I think early part of the year, we see some churning lower. I think we see a little bit of pullback right after the new year, which I would actually welcome welcome as a long-term investor because it'll give me a chance to, put some money to work in some of the stocks that have gotten stretched, right? So I look forward to that. But then I think as we move through the year will improve into the second half of the year. And do I think we could do 7,000? What's that, like a 16% move from where we are today? Sure. That would actually be, I think this year we're at 27% in the S&P. 16% would be almost a failure compared to where it was this year, right?
Kenny Polcari, it's always great to talk to you. Thank you.
Always great. Merry Christmas to you.